G'day and welcome to the Global View. Let's get across what we're seeing on this Tuesday. I'm Andrew Gagan. Thanks for joining us again here at Ausbiz. So, markets in the US and UK were closed for holidays. Elsewhere, equities rallying and oil prices plunging on optimism that the US and Iran are close to a deal to end the war. Now, S&P 500 futures rose to a record high, while Nasdaq 100 futures up 1.3%. Let's focus then on Europe. Stock 600 closing at its highest level in more than 2 months and less than 1% away from its February record high, having recovered all of its losses since the beginning of the Middle East conflict. Germany's DAX, that finished 2% higher, led mostly by gains in Siemens and Infineon. And the airlines gained as oil prices slid. The European tech sector rose with the sub-index on the Stock 600 up more than 25% this quarter. Chip-making giant ASML among the winners. While AI equipment maker Schneider Electric rose more than 3%. Delivery Hero jumped to an 18-month high on reports that Uber was weighing a raised takeover bid for the German food delivery group, with it having rejected Uber's previous offer, valuing it at around $13.4 billion US. Well, President Trump has said that negotiations with Iran over an interim deal to extend the ceasefire and reopen the Strait of Hormuz were proceeding nicely. Iranian and US officials are meeting in Doha, with media reports suggesting that the framework extends the ceasefire by 60 days and includes allowing pre-war levels of traffic through the strait within 30 days. Talks on Iran's nuclear weapons and missile development programs are expected to fall under a second round of talks. Elsewhere, European leaders have condemned Russia after it launched one of the heaviest bombardments of Kiev in the 4-year-old war with Ukraine, with Britain and Germany describing the use of the Oreshnik hypersonic missile, that's an intermediate range missile capable of carrying nuclear weapons, as an escalation. And the overnight barrage killed 2 people in Kiev and wounded nearly 100, according to Ukrainian officials. Well, the US Treasury physical market was closed for the holiday, but futures traded, implying the 10-year yield, which fell 1 basis points. Australian 3-year government bond yields traded around 4.52%, the 10-year close to 4.9%. The US dollar index down around 0.33%, the Aussie trading at 71.7 US cents. So oil prices have tumbled on optimism that the United States and Iran are moving closer to a peace deal that would reopen the Strait of Hormuz, despite both sides playing down the prospects of an imminent breakthrough. Brent crude futures falling 7% to $96 a barrel. Gold rose as the US dollar fell, spot gold trading at around $4,570 an ounce. Copper futures were up around 1.5%. Iron ore up to $108 US a tonne, and Bitcoin is currently trading above 77,000 US dollars. Well, global equity markets are becoming increasingly driven by the tech and AI trade, with correlations rising across both developed and emerging markets. Let's take a closer look at one of those emerging markets. Mugunthan Siva joining us from India Avenue. Good to see you again.
Likewise, Andrew.
Well, we know what's going on Wall Street with the AI trade, record after record. So what are we seeing in emerging markets at the moment, and where, particularly how tech has been played?
So typically when you're investing in emerging markets, you're trying to find growth opportunities in these differentiated economies with higher growth rates driven by things like demographics, infrastructure. What we're seeing today is the emerging market trade being dominated by Taiwan and Korea. Taiwan and Korea actually have a higher weighting now than India and China put together. And the top 5 stocks in emerging markets, which are about 30%, are essentially Taiwan Semi, SG Hynix, Samsung, Tencent, Alibaba. So it's a very correlated trade to the Mag 7 and what's happening in the US and broadly across the world.
Well, let's in fact we'll bring up a slide there just indicating the concentration that we're seeing at the moment. Hopefully we've got that up there. So just talk us through what this explains.
Yeah, so you could see there the pie on the left, there's a concentration essentially in one theme, which is close to 30% of, this is global equity. So it's developed equities across the world, excluding emerging markets. The middle pie is, highlighting what we just spoke about, which is 30% of the emerging market trade is now sitting in 5 stocks. And I think as a emerging market seeking investor, you're not necessarily looking to play the fundamentals of Korea and Taiwan's demographics. These companies are domiciled in these regions, but essentially are global, globally significant businesses, which are operating in the same area as US tech or global AI thematics. So it can lead to a bit of a binary outcome where there'll be points where everyone loves AI, and there'll be points where something comes out and we might question where that goes, which can create issues.
All right, well, let's now focus then on India. Obviously, your focus there at India Avenue Investment. And in particular, I guess, in fact, we can bring up another chart just as far as the correlation we're seeing there.
Yeah, so as we saw on the previous chart, India doesn't have that same concentration, and that leads to this, which is, the correlations between India and emerging markets and India and the rest of the world has dropped away. It's not been a participant of the AI trade, and in fact, India's IT services companies have actually been derated largely because of question marks around deflation in services. So in a way, for a global equity investor seeking growth, India is a diversification play from the whole AI trade. Now, you may not want that diversification if you're very bullish on AI, but it feels more and more like it's becoming binary when you invest in global equities, whether you like AI or not.
So what is happening in India, particularly the AI disruption we're seeing, and so much of the Indian economy there, when you look at tech, is in the services sector. How's this disruption playing out?
Yeah, so the typical model for India is, something becomes scale, and then they can replicate that scale using scale economics of population, labor arbitrage, all those things which they've been efficient at from a volume perspective. So we will see India build more data centers, participate in some semiconductor plants that will be constructed there, and therefore eventually do that at a cheaper price. And you will see the Googles and Amazons trying to participate by establishing footholds in India, but it's certainly late to the game. So the focus for India is now very much around, we've seen this energy crisis. We need to pivot towards renewables. We need to focus more on solar, hydro, wind, renewable aspects of energy capacity, as well as become a better exporter. So if you look at the Indian government's plans, essentially they want exports to grow from 860 billion in FY26 to over $1 trillion US. Part of that will be helped by lower currency, which tends to make your exports more competitive. That's what they're chasing.
Which exports in particular then they'll be focused on?
So we've all heard about the electronic goods and the Apple making products in India, engineering goods, pharmaceuticals. We've discussed many times about India trying to roll out generic drugs to the rest of the world. And you're seeing a pattern emerge, which is not focused purely on volume, but trying to move up the value chain. So whether it's making the windows or upholstery of a Mercedes-Benz, or being involved in specialty chemicals, or moving up the curve of generic pharma, that's what India will focus on.
You talk about India being powered by unique demographics that are going to benefit investors. How so?
Well, largest population in the world,
Yep.
But that's just the headline number. Average age of 29. So if you look at historically, we've seen the US benefit from post-industrial revolution. We've seen Japan, China, Korea all go through population booms where there's a large part of the working labor force. It's India's turn now. The question mark will be, what about employment? Are you getting that demographic which is favorable traditionally at the wrong time in the cycle?
Well, to that point, because of the rise of AI, does the scale of a workforce actually now less important?
Yeah, so good question. I think what we've seen in the past is labour pivots towards employment areas which are new jobs, rather than simply sitting on its hands and saying, okay, we're not employable anymore. So in every evolution that we've seen in history, we've seen employment pivot towards areas where there is potential going forward, and I think it will be the same this time.
And Mugunthan, overall, given there's a lot of optimism now, we're pretty close to the end of the war. Mind you, we have heard this before. How would you judge the performance of what you're seeing on the Indian share market, and perhaps what you would expect in the second half of the year?
I would say India's markets have been abysmal in the last 18 to 20 months, to be honest. It's the largest divide return-wise to emerging markets that we've seen in history. So this underperformance now places the Nifty 50, which is India's top 50 stocks, at a valuation of around 16.5 times 1 year forward. This is hard to see in the past, where India's often traded over 20 times. So, if you're a believer in this demographic story and the structural growth story, valuations are far more reflective of India's hardship in the last 18 months.
Mugunthan, always great to get across those prospects in India. Thanks for joining us on India Avenue Investment Management.
Thanks, Andrew. Always a pleasure.
Let's now turn to the market open here, just a couple of minutes away. We are expecting another positive start, building on those recent gains. And that's we're seeing that momentum globally. Of course, mind you, we don't have that lead-in from Wall Street, given it was closed overnight, but SPI futures there up around 0.25%. Stay with us, the open just around the corner.